Hello, ladies and gentlemen. My name is Chris Leyland, and I'm the investment director who heads up the True Potential portfolio proposition. I'm here today to review 2018 and look out towards 2019, and that's for both the portfolios and markets. So before we start, let's restate what our long-term objective for the True Potential portfolio proposition is. So overall, the goal of the True Potential portfolios is to maximize return for a lower level of risk in a lower cost, highly diversified investment product. So let's start by talking through what has happened recently. Overall, 2018 was a very challenging year, and the figures on the screen illustrate how it has compared to previous years. If we then look at 2018 on its own, the slide illustrates the performance of each asset class separately. So what happened? So up until October, the US equity market had clocked up a new record, the longest lived bull market where share prices are rising in history. As we move forward, despite delivering 3 outstanding quarters of corporate earnings growth, the US market began to falter with more aggressive rhetoric coming from the Federal Reserve and nervousness from the continuing US-Sino trade war, triggering a global equity market sell-off. Starting with the Federal Reserve, it may seem a little bit odd that a group of some of the most respected central bankers discussing how well the US economy is doing and why interest rates need to keep on rising steadily wouldn't support equity markets. With the discount rate, i.e. the risk-free rate of return, rising, it meant that companies with high price to earnings ratios struggled to maintain their valuations, and therefore these were the stocks that sold off first. With trade tensions and the ever-growing doubt that US tech giants such as Apple and Amazon could struggle to live up to their newly acquired trillion-dollar valuations, the news brought major indices in the US down with a bump, with US equities one of the worst performers during the last 3 months of 2018, although that is on the back of stellar returns for 2017. So the UK did not fare very well, with political risk continuing to dominate the UK investment horizon all year. Deal or no deal varied on an almost daily basis, but that's very much specific to UK markets, not really moving markets globally. Within bond markets, you're seeing a dichotomy of returns. Higher quality government papers such as UK gilts have performed well as investors looked to more perceived safe areas to invest. On the flip side to this, high yield bonds struggled as investors rotated into lower risk paper, and a number of high-profile corporate mishaps made market participants a little bit nervous. Alternative assets came to the fore, with investors looking outside their traditional areas of equities and bonds to try and find returns that were uncorrelated to stock markets. Gold fared particularly well as investors looked to de-risk their positions. So let's move on to the True Potential portfolios and let's have a look at the actual performance figures. I think it's never comfortable to say one has performed well when client values have been pared back, but if we compare the annual performance to a reference point, let's say the FTSE 100, which is down nearly 8%, you can see that diversification within the True Potential portfolio proposition has helped clients not to experience such a large fall. Moving on, here we can see a graph of the True Potential balanced portfolio over 2018, again compared to the FTSE 100, and it illustrates lower volatility and higher returns. As for advanced diversification, this has generally worked. Within the portfolios, we have assets that actually provide a positive return in the more negative months such as December, illustrating diversification working. Assets such as gold, various hedge funds and currency funds all provided more than a positive 4% return over the month of December. Remember, the portfolios contain assets that can actually make money in falling equity markets. If we look at the managers over the year, as you know, we've added in the True Potential Growth Aligned fund range to the portfolios, which is actually one of the best performing fund ranges since it launched in May. And again, that offers increasing levels of style diversification. Looking at our other partners, Close Brothers showed their stock picking skills, producing a strong set of numbers, and they're also the manager with the heaviest weighting within the portfolios that we've added to in 2018. So this illustrates the True Potential portfolio investment process working. On the more negative side, the True Potential Goldman Sachs Balanced Fund struggled, but remember, it has a conviction position towards emerging markets, and that detracted from performance against the backdrop of US interest rate rises. The True Potential Allianz fund range also detracted from performance with, I guess it's more momentum style struggling, particularly during the down months of February and March and December.